What is going on, everyone? Welcome back to the channel. Happy Sunday. I personally hate the weekends because the markets are shut, but tonight I get my life back. 10 p.m. The markets are open and we obviously back in action. Now, I'm going to run through what's been actually happening in the markets. Dollar slid off last week and equities rallied, cryptos have rallied. So I'm going to cover the top 5 things I'm looking out for in the markets, but more importantly, what is happening this week in terms of data, what you actually need to know, and how to capitalize on this week going forward. So let's jump straight in. We'll start on the dollar as we do, and we'll go from there. Let's go. Right, looking at the dollar overall, it does look like the dollar has slowly but surely peaked at the highs of 108.750. Now, let's get into the fundamental reason why dollar slid. I actually made a YouTube video. I'll try and put the link somewhere, somewhere there. But dollar slid. Obviously, inflation has peaked. We had a print of 8.5%. Now, what does this tell us? It tells us that what the Federal Reserve have been doing is working. And I personally, for the short term, am a dollar bear. However, I don't think the inflation narrative is over. I personally do still believe along the lines of double-digit inflation, possibly towards the end of the year, especially with rising energy prices and what that's actually going to do to inflation overall. So dollar overall for myself, I'm a short-term bear, right? I do believe to possibly trade this further to the downside this week. Looking at this on the 4-hour, we can see structure has beautifully broken to the downside. So the inflation video that I'd done a couple days ago, I mentioned there was 2 scenarios as to this trading lower, and we had that 3-drive rally into the highs, into that area of value. Now, for myself, I tend to trade out of areas of value. I tend to look where the market has rejected multiple times for us to then capitalize on that move overall. So we've obviously extended that leg to the downside, right? How do I do that? Just literally clone the existing leg to the downside. If you look at that, that leg is complete, right? Those 2 legs are complete, and I'm really possibly looking for another leg to the downside should the retracement actually occur. So there again, I'm fibbing from the high to the low, and I'm looking for another push back into 106. Nice little round psychological level of 106, and there again, we're doing the same thing, possibly looking for a short-term leg on the dollar to the downside. Why? I favor this current narrative that we have, especially with this week. There isn't much data coming out for the US, so I do think this current narrative is more than likely going to extend into the next week. So looking at this overall, for myself, I'm possibly a dollar bear. And there again, as I mentioned in every video, this is not financial advice. This is purely just based on my opinion, matching the highest probabilities that I can to obviously capitalize on the current move. So dollar, if I am looking to be a dollar bear, I'm looking at the likes. And now if you notice on my watch list, I have various sections, various things that I'm trading, different assets and so forth. Then I am obviously looking at equities. Equities have been rallying to the upside. You got gold breaking out of 1800. I did mention this in my inflation video. And then dollar, if I am looking to possibly be a dollar bear in and around the 106, then I am looking at possible long positions on euro. I do understand, however, euro has hit a bit of a level of resistance. I do understand how we have sold off. However, what I'm not going to ignore is how we have broken out of this area, right? And we have come back to retest this area. This week, by the way, we do have Eurozone data to look out for. I think it is on Wednesday. Yeah, Wednesday, we obviously have Eurozone GDP. We do understand that GDP overall is going to be lower than expected as a global narrative. Why? People are spending less. Things are just too expensive. That is naturally going to have its effect on euro. However, I'm playing it off more of a dollar weakness more than a euro weakness. So I do favor a possible bounce on the euro. I'm not as too sure where I'm going to be entering. If I do go ahead and identify a bit of an area, let's delete this one for a second. If I have to identify 2 areas to possibly trade from, it would be, let's use a horizontal ray for this. Let's use these lows and that low over there. So I am looking for the market to possibly come into as a lower end 102, right? A nice little round psychological level of 102. Let's pin that. There we go. Price label. Let's get that on 102. So we keep it there visible. That's a 50 pip drop. So into the open, possibly Monday, possibly Tuesday. Still expecting a bit of a lift in the dollar, as we are expecting dollar to rally into 106. We can obviously look at the likes of euro having one last push into this area of 102, and that could provide us with some long opportunities from there. So that's something I'm looking out for. Then obviously on Wednesday, we do have UK inflation. That's going to be another big one, very similar to what happened in the States. If we have had a peak, right, UK inflation, we are expecting it higher. However, if we have had a slight peak, that means the roof, the ceiling has been printed. So if we do have a peak, you're going to expect a number lower than 9.4 in the UK. I personally think we're going to keep rallying. I personally think we're going to have double digits. So there again, if that happens, that's going to provide possible trading setups on the likes of cable. So cable, I've left this short on there, purely educational purposes. I was short on this last week. There again, 25 pip stop loss on this one. I was fairly in profit. Obviously whacked me out there on that second time. So left that one alone. Kind of glad I did. Obviously, you have to trade with a stop loss. That's what the stop loss is there for, right? So GBPUSD, there again, very similar to euro. We reacted out of that 122.50. Nice little round psychological level. However, I'm now piecing these two together. If I have dollar weakness, right, into the week, midweek, Tuesday, Wednesday, that lines up with the UK inflation Wednesday, right? So that gives me a possible double whammy to capitalize on some pound strength should that strength come in. So we do understand this level of 121 is a major level of support. Massive, massive level of support. I do understand around this sort of event, you're going to have a lot of volatility. So what I would possibly suggest is draw an area of value, which we understand is roughly around there, around the 121 region. Dropping to the 4 hour, very similar to the euro. Let's get rid of this. Let's get rid of that. Let's get rid of that. This. Let's extend this slightly. So we have an upper band, we have a lower band, and this gives us an area to trade within. So should cable possibly have one last push to the downside, right, into that 120.50 region, then I am going to be looking for some possible long positions. There again, from a technical standpoint, why do I say that? These two previous highs have been broken, and there is a possible fib setup in there as well. Should the market push one last little push into this area, a little bit of a spike into the news, then I'm personally trying to buy those cable dips. There again, am I a long-term dollar bull? Possibly. Am I, however, looking at the fundamentals that we have in front of us to identify a high probability setup? Yes, I am. Do I think that we could have a bit of a channel, bearish channel over here on the dollar? Yes. And there again, that's why I'm looking for euro and cable. Fun fact, if you didn't know, cable, GBPUSD, is called cable because back several years ago, many years ago, pre-internet, right, or pre-Wi-Fi, there used to be a cable running between the New York Stock Exchange and the London Stock Exchange, and there again, that's how they communicate, that's how they would trade, and that is why it is called cable. So, I love trading cable. I live here in the UK. Why not, right? Gives me good volume during London session and allows me to capitalize on the US session as well. So, dollar, one last push into 106 before the overall rollover. But just briefly touching up on equities. Equities have rallied as inflation does look like it's peaked. Why? If inflation is peaked, the Federal Reserve have two mandates, also known as their dual mandate. That is maximum employment, which we understand is already at 3.5%, and price stability. If price stability, known as inflation, right, if that has already started peaking, that means their dual mandate is fairly complete. However, inflation is very far from the Fed's target. The Fed's target is roughly around 2% on inflation, so we're very far from that. Do I think inflation has just completely slowed down, the narrative's changed? No. Do I think this is a short-term pivot? Possibly. Do I still think they're going to carry on raising? Yes. It all depends on how aggressive they are when they raise. So, Equities have rallied. Risk in general has rallied. You've got gold back above 1800. As I mentioned in my newsletter, if you're not subscribed to my free newsletter, I'll leave the link below. Subscribe to my newsletter. Share my thoughts on there as well. I do possibly see gold back at 1825. Right, based on the daily, based on the weekly, 2 weekly. The 2 weekly looks very, very strong to me. That's something I look at instead of the monthly. You must be thinking, what is going on with all these lines? Trust me, they make sense. Right, the blue lines are 500 pips apart. The black lines are just 250 pips apart. So it gives me those ranges to trade within. Now, we have pretty much reversed from these lows. We can see price hasn't liked this whole area of 1700. Am I, as I mentioned in my previous video, am I buying these dips or selling the rallies? I favor selling the rallies, as I do favor commodities getting hit into this recession that we're going into. Do I think the whole narrative has changed? No. Do I think it's a slight pivot from the narrative? Yes. Does this provide intraday or short-term opportunities? Yes, it does. So we want to try and capitalize on that. So we got gold possibly heading into 1825. There's a lot of liquidity up here. So looking at that on the 3-day, the 3-day looks really, really good. We've obviously had, if we just take a look at this, you have one impulsive move, you have a bit of a slowdown, another impulsive move, slowdown, impulsive move, slowdown, impulsive move. We may have a bit of a slowdown. Inflation on Wednesday may be a catalyst for gold to rally into 1825. We understand that gold, as an inflation hedge, does rally on the release. Could that provide us with some opportunities? Possibly. So any little trade set up for me on this, I do favor. We obviously had a fake out of this rising wedge over there. However, any breakout retest of 1800 will obviously provide great risk reward opportunities if you were to take that back into 1825. Tuck your stops fairly below 40, 50 pips, whatever that may be for you. Should price breakout retest and 1800 holds as a level of support, then you're obviously going to be capitalizing on dollar weakness and the possible rally in risk if risk continues to rally. So cryptos as well. BTC has rallied, hit 25k this morning. You got ETH back at 2000. There again, this is on the rumors of the merge, not rumors, the merge that's happening. I know in September, I think the final date is September 15th, just before my birthday. So we may have a further rally in ETH. Do I think the bear market bottoms in? No. I do think this is just a relief rally across the board personally. And I do still favor shorting some of these assets should they come into areas of value. So area of value for myself on ETH is 2,500. And that's my first little area of value to come back into those lows. But then looking at BTC, you can obviously see on the 12-hour. The 12-hour I like to use on cryptos, by the way. Very, very good little indicator. 2 candles per day. So not as volatile as looking on the lower time frames. But yeah, BTC stuck within this channel, in my personal opinion. So if we do have one last push on Bitcoin, I do think we may come into 25.4, which there again lines up with a significant wick spike, which tends to recollect several times on crypto assets. So should we have that one last push or one last rally, there again, I think this is a short-term relief rally in risk. I don't think this is the bottom at all, in my personal opinion. So yeah, that may be the case. Right, pound yen. I have been short on pound yen since last week. There again, on the release of that inflation print that we had last week, we saw dollar yen take a nosedive. So we'll briefly look at dollar yen. Dollar yen took a quick nosedive, and there again, taking all yen pairs with it. Pound yen, obviously being my favorite. I've traded pound yen for years. That provided some short opportunities for us on pound yen. On the lower time frames, those fibs were ever so perfect. Let's get that back where it was. Cool. Yeah, nice little lower time frame fib provided multiple short opportunities. The same thing going into the new week. I do favor a further decline. Let me draw that properly. There we go. I do favor a further decline on pound yen. What am I looking for? I'm possibly looking for one last push into 162.50. Why do I say that? For every impulsive move you have in the markets, you're more than likely going to get that correction before that overall rollover to the downside. So pound yen, another one of my favorites to focus on this week. There again, guys and girls, I am focused on about 4 trades this week. You're looking at euro, you're looking at pound dollar, I'm looking at gold possibly hitting 18.25, and pound yen coming back into 160. So there again, it could be a good 700 to 1,000 pip week should we capitalize on all those moves. Not necessary, right? Not necessary at all. As I have mentioned before, your whole goal is to enter the markets, take what it's giving you, and leave. Be that 200 pips, be that 300 pips. You've got to take what it's giving you and leave. But I'm going to end this video there. Hope you have a great Sunday. Go ahead and rest up. This week's going to be an exciting one. Stay tuned on the channel. Please do like, share, comment, subscribe. And I'll see you guys on the next video. Take care. Bye-bye.